Well, I think probably the first quarter of next year, and I don't think the Bank of England seemed to move significantly to make me or probably the market generally think that those sort of expectations are likely to be, very wrong.
Anything jump out at you? I mean, we picked out the comment on Slack. Of course, the inflation expectations we've looked at as well. Anything else jump out at you?
No, not really. I mean, obviously, the bank mentioned that of this sort of capacity gap of 1 to 1.5% of GDP, that spare capacity may be at the sort of more modest end of that range, more like 1% perhaps rather than 1.5%. So a slight sort of tightening in a sense there. But I think, as you mentioned in your introduction, the market was perhaps fearful that the bank might be somewhat more hawkish than it came across. And as a result of that, as you say, we've seen sterling lower and interest rate futures move higher.
We talk about 1 to 1.5% of GDP, the slack. That slack's mainly in the labour market, right?
Totally.
Totally in the labour market, okay.
In actual fact, I mean, this is a bit of a sort of contrick from the Bank of England here, because previously, obviously, we had the 7% unemployment threshold target, and then that was dropped when it was clear that unemployment would go through that level, as indeed obviously it is now. And the bank instead moved to this idea of spare capacity, and it isolates two areas of spare capacity. One amongst firms, are firms working sort of not full pelt necessarily, but certainly in the range of their normal level of activity. That's the one side, and the other side is what slack there is in the labour market. The Bank of England continues to say there's no real slack in the business sector, but there is in the labour market.
All right, clearly that falling unemployment, inflation as a result of that would see some upward pressure. Is it dangerous to rely on sterling strength to quell that inflation pressure?
Well, I think the issue about sterling strength is less actually to do with its inflationary implications. I think the bank, unlike the ECB, for instance, which is obviously concerned about how the strong euro has dampened inflation below its own forecast, I think the Bank of England takes a slightly different view, and I think it's more concerned about the rebalancing of the economy, the persistence, obviously, of these large trade and current account deficits, and in a sense, therefore, if it would like to see a lower sterling, as I dare say it would probably be more from that rebalancing perspective rather than any inflationary implications.